The story of the Iraqi dinar is a story about time. It's a story about patience, about hope deferred, and about a question that has hung in the air for over a decade. When, for a community of speculators, that when has often been attached to a year 2010, 2014, 2019, 2023, and now, with increasing frequency, to 2026. The narrative is compelling. 2026, the year Iraqi dinar speculators finally strike gold. It's a powerful headline. But, today, we are not going to just read the headline. We are going to conduct a forensic audit of the entire article. We are going to dissect the argument for 2026 not through the lens of hope, but through the lens of economics, geopolitics, and institutional mechanics. By the end of this, you will not have a simple yes or no answer. You will have a framework, a set of specific, verifiable criteria against which you can measure the progress towards that headline becoming reality or receding once again into the future. This is not about predicting a date, it is about understanding a process. First, we must establish the playing field. What does it mean to strike gold in this context? For the speculator, it typically means a significant, order of magnitude, revaluation of the Iraqi dinar against the US dollar, transforming a modest investment into life-changing wealth through a single financial event. This is the dream. The economic reality, however, is far more complex. A sovereign currency does not revalue in a vacuum because a group of people hope for it. Its value is the ultimate report card on the health, stability, and prospects of the nation it represents. Therefore, the question, will 2026 be the year, is not a question about time. It is a condensed version of a much more substantial question. By 2026, will Iraq have successfully implemented the comprehensive suite of reforms necessary to justify and sustain a fundamentally stronger currency? This reframing is crucial. It moves us from passive waiting to active analysis. Our focus shifts from a calendar to a checklist. So, let's build that checklist. What are the non-negotiable prerequisites for a currency to undergo a sustained, legitimate increase in its international value? We can group them into three pillars, or gateways, that Iraq must pass through. Gateway 1. Fiscal and monetary sovereignty. This is the foundation. A strong currency cannot be built on a weak state budget. For decades, Iraq's economy has been characterized by a rentier state model. Over 90% of government revenue comes from oil, sold in US dollars. This creates a paradox. The state is dollar-rich, but dinar-weak. It breeds a public sector bloat, funded by dollar conversions that inject dinars into the economy without corresponding productivity, fueling inflation. To pass through this first gateway, the Iraqi government must demonstrate a decisive break from this model. This is measured by the successful implementation of its multi-federal budget framework with a clear trajectory of reducing its nominal deficit. It means passing and enacting a 2026 budget that drastically cuts wasteful expenditure, invests in productive infrastructure beyond the oil sector, and legally enforces the independence of the Central Bank of Iraq (CBI) from government financing requests. The CBI, in turn, must prove it can control inflation through modern monetary policy tools, not just by managing the dollar auction. The signal of passing this gateway will not be a rumor, it will be a series of dry, public documents, IMF reports praising fiscal consolidation, and bond market assessments showing improved creditworthiness for the Iraqi government. Without this gateway being secured, any talk of a stronger dinar is building on sand. Gateway 2. Financial system integration and transparency. A first world currency cannot live in a third world financial system. The Iraqi banking sector has long been plagued by opacity, a dominant shadow economy, and a wide gap between the official exchange rate and the parallel market rate. For the dinar to be globally respected, the system that houses it must be trustworthy. Passing through this second gateway means the asterisk complete digitization and regularization of the domestic economy. It involves the full rollout of a national digital payment system, the rigorous enforcement of Know Your Customer laws across all banks, and the successful closure or dramatic narrowing of the gap between the CBI official rate and the market rate on the streets of Baghdad and Erbil. This gateway is about eradicating the structural need for a parallel market. It is measured by FATF Financial Action Task Force reports removing Iraq from its gray list, by Swift metrics showing a massive increase in legitimate electronic dinar transactions, and by the consolidation of the banking sector into fewer, stronger, internationally audited institutions. When you read about banking reforms, this is the tedious, multi-year project they refer to. It is the wiring of the nation's financial nervous system. Gateway 3. International confidence and settlement. A currency's value is ultimately a measure of trust. Trust that it can be used freely, that its value won't be arbitrarily confiscated, and that it can be exchanged for goods, services, or other currencies predictably. Today, the Iraqi dinar is not a fully convertible international currency. Passing through this third and final gateway means achieving formal recognition and integration into the global financial architecture. This could take the form of a new IMF-supported exchange rate regime, such as a managed float or a peg to a basket of currencies. It requires the resolution of long-standing international issues, such as those with the U.S. Federal Reserve's corresponding banking relationships. Most importantly, it requires that major international banks not just in the region, but in New York, London, and Singapore deem the Iraqi financial system sufficiently compliant and low-risk to offer direct dinar liquidity and settlement services. The signal here will be an announcement from a bank like Deutsche Bank or J.P. Morgan of a new Iraqi dinar trading desk, or a public statement from the U.S. Treasury and the CBI on a new financial cooperation framework. Now, with these three gateways defined, we can analytically assess the 2026 thesis. Proponents point to the year as a natural culmination point, the end of a government term, the projected completion date for key IMF programs, the expected coming online of major non-oil infrastructure projects like the Grand Fall Port and associated rail corridors. The argument is that 2026 represents a convergence of political, economic, and project timelines. This is not illogical from a planning perspective. However, convergence on a calendar is not the same as completion of the gateways. The critical, sober work for any serious observer is to map the public, verifiable progress toward each gateway against the timeline, the 2026. For instance, gateway on fiscal sovereignty is the 2024 budget being executed as planned? What is the Q3 2024 report from the IMF on Iraq's fiscal performance? Has the law for the independence of the CBI been drafted, let alone passed? Gateway to financial transparency What is the current spread between the official and parallel market rates today, and is it narrowing month over month? Has the FATF issued a positive interim report? What percentage of public sector salaries are now being paid digitally? Gateway 3 International Integration Are there any public memoranda of understanding between the CBI and other major central banks? Has there been a single, credible report of a Western commercial bank conducting a test transaction outside of humanitarian or oil trade channels? This evidence-based thought is the antidote to speculation. It reveals whether 2026 is a substantive target for reform completion or merely a new temporal placeholder for hope. This brings us to the core, uncomfortable truth that separates the speculator from the analyst. The process described by these three gateways does not culminate in a strike gold event for the specu. Later in the way it is often imagined. If and when these gateways are passed, the most likely outcome is not a sudden, thousand-fold revaluation, but the gradual, deliberate, and tightly controlled international acceptance of the dinar at a rate that reflects Iraq's new economic fundamentals. It would be the start of a new chapter of stability and slow, managed appreciation of victory for the Iraqi economy and its people, but a far cry from the speculative bonanza of popular fantasy. The banks and institutions that have prepared contingency plans will facilitate a structured, compliant process for converting notes, heavily focused on anti-money laundering checks. The windfall, if any, would be subject to capital gains taxes. The idea of a secretive, overnight windfall for retail note holders outside the system is a fundamental misunderstanding of how modern global finance regulates such transitions. Therefore, the most important preparation for 2026 is not hoarding physical currency in a safe. It is *** documentary, financial, and educational preparation ***. 1. *** documentary proof. ***, can you irrefutably prove the legitimate origin of your holdings with bank records or notarized affidavits? This will be the first and most important question from any compliance officer. 2. ***, financial positioning. Do you have an existing relationship with a bank that has a sophisticated international desk? Have you structured your affairs to handle potential tax implications? 3. Educational foundation. Have you moved your focus from rumor forums to the primary sources, the CBI website, IMF country reports, and reputable financial news wires? In conclusion, the year 2026 is significant. It is a real deadline for a real reform agenda. It is a valid focal point for analysis. But the question is not, will 2026 be the year speculators strike gold? The more accurate and more answerable question is, ***, by 2026, through which of the three gateways will Iraq have demonstrably passed, and what will that mean for the realistic, practical value of the dinar? Your power lies in your ability to ask that better question and seek its answers in the light of public data, not in the shadows of speculation. Align your expectations with the slow, arduous, and unglamorous work of national economic reconstruction, and you will possess a clarity that transcends the endless cycle of hope and disappointment. That, ultimately, is the only thing of enduring value you can take from this long wait.